You look at your screen. You see a number. You assume that number represents physical reality, sitting safely in a cold, concrete room waiting for your return. But here is the reality of the architecture. That digital balance is not your money. It is an unsecured IOU. A legally binding admission that the institution owes you capital it likely does not possess. If you print money in your basement, you go to a concrete cell. When a bank loans out 10 times more money than it holds, it's a deposit. To decode the mechanics of this trap, look at 17th century London. Merchants surrendered physical gold into heavy iron vaults for protection. In exchange, the goldsmith locked away the metal and issued a thick parchment receipt. A physical claim on a hard, physical asset. The foundation of early trust. But carrying iron and gold is exhausting. Quickly, the merchants stopped withdrawing the heavy metal. They simply traded the paper receipts in the streets. The physical gold never moved. It sat in the dark, gathering dust. The goldsmiths noticed this behavioral glitch. An asymmetric advantage. Since only a fraction of merchants ever claimed their physical reality on any given day, an opportunity arose. They began quietly writing new receipts for gold that did not exist. They loaned out these paper ghosts to new borrowers, and collected real, physical interest on the phantom money. This is the precise moment the modern mechanics of systemic extraction were permanently codified and perfected. The birth of fractional reserve banking. A mathematical cheat code for conjuring reality. It dictates how reality is multiplied. If the reserve requirement is 10%, one real gold coin generates 10 phantom coins in the ledger. Pure systemic alchemy. The gold never existed, but the debt is absolute. The fundamental mechanism hasn't changed in 4 centuries. They did not alter the math. They merely changed the locks to secure the perimeter. Today, the sovereign dictates the illusion from a glass tower in Switzerland. The Basel Accords. We are told this is a complex safety net of capital requirements designed to protect the citizen from institutional collapse. History and the physical ledger prove otherwise. It is a dial, not a shield. Basel merely acts as the global regulator of the reserve requirement. It dictates the exact legal percentage of emptiness a vault is permitted to maintain, telling the banks exactly how many ghosts they can legally lend. The entire fiat architecture is an asymmetric trap. It relies entirely on a single, fragile psychological agreement between the sovereign and the citizen. An agreement that the citizens will never look inside the box at the exact same time. Because the moment collective confidence fractures, the mathematical illusion instantly collapses into the physical reality of an empty room. The math burns, and the iron remains. The bank run. The final audit of a rigged system. When the masses finally arrive to exchange their paper for iron, the gates lock. The truth is revealed in the silence. The ledger always balances on paper. Make sure you aren't the currency.